Ever think if only I could get my hands on a few $1,000, I could build that business I've always wanted to build?
And after inventing Anna, the dropout, and We Crash, I will never seek venture capitalist money for my dreams.
Or finally, but who's going to invest in a queer owned, black owned, female owned, minority owned small business startup like mine?
Well, if you've ever had thoughts like these, you might want to find an angel investor. And we've actually tapped the best angel investor for minority, small owned businesses that we know, Arlan Hamilton of Backstage Capital, to come on this episode, 316 of the Queer Money Podcast, to talk about funding your dream business.
Let's get on with the show. David,
Yes.
do you think there's any chance on earth that I could be an angel someday?
Oh, yes. Actually, there is. You could be an angel investor. Folks, before we dive into the discussion with Arlan, I know that many of you have joined the podcast to listen to Arlan or hear Arlan, more information from Arlan. Arlan let us know that she's a very busy person. She's allowing us to have 20 minutes of her time. But before we get started, we wanted to kind of lay the groundwork for some of the discussion we had with Arlan. And we wanted to talk about what angel investing is first, so you understand what a little bit more about the discussion that we had. So first of all, what is angel investing? Well, angel investing is when a high net worth person, typically somebody who has hundreds of thousands, if not millions of dollars, take some of the money that they have and they want to invest it, but instead of investing it in what we typically know as typical kinds of investments, they invest it in someone else's small business. And when they do that, they're usually doing that in exchange for some ownership of that company.
And that could be anywhere from 5% to a controlling share, so you're over 50%. But as with any investment, there are pros and cons, and you always want to make sure you're crystal clear on all of that before you dive into the investment. So here are the pros. The primary pro, probably not too surprising to anybody, is that you get access to capital. You get access to some money that you can infuse back into your business to hopefully grow your business over time. You can use that business to scale your business. You use that capital to scale your business. And as any small business startup or entrepreneur knows, sometimes you even need money to pay yourself because usually you're the last one that gets paid, right? So someone's got to put ramen on the table. Hopefully this infusion of capital will help you do that.
Right. And I think that one of the important things to remember here is that angel investors are usually investing in businesses that have already started, right? This is not startup money. This is not seed money to start a business. This is money that these investors are coming in and they're saying, okay, this looks like a business that's already started. It's earning some money. It might be profitable and it needs an infusion of capital. It needs some money to come in to help it grow bigger, potentially giving them opportunity to even more returns on the money that they're investing.
Some other pros with tapping in angel investors that you get access to their Rolodex of contacts, right? So they have the experience with dealing with bankers, accountants, attorneys, and all other kinds of investors who also have experience with startups and small businesses that are trying to launch off the ground. And so they can tap into those resources to help you be more certain that you're on the trajectory for success. They can also connect you with potential employees for your business, as well as even eventually down the road, connecting you with customers. And then, of course, as with most entrepreneurs, you typically only start 1, 2, or 3 maximum businesses in your entire lifetime. Well, an angel investor has experience in doing that several times a year. They're funding all sorts of small businesses, and so they've got experience having gotten these businesses to very successful positions. So you're tapping into their wealth of information that you can use to guide your company to success.
But not all angel investors are high net worth individuals. Sometimes there are other types of individuals who are angel investors. So, for example, it may be someone who is a family or a friend of your family or a friend of yours who has some money that they would like to put into your business in exchange for some ownership. One of the more popular ways today is through crowdfunding, getting angel investors. Some of the biggest names in the LGBT space and the art space that we know of started out with getting money from crowdsourcing angel investors. So, for example, Mr. B&B, the LGBT version of Airbnb, it got its start. You got started and then it went to the market and said, we need angel investors. We need money coming into the company to help it grow. Meow Wolf, one of the biggest well-known art installation purveyors out there. They have museums and art all over the place. They actually went to the market also and got angel investors. And then Reverie, which is a queer streaming service, used angel investors to help them grow as well. So that is some of the some of the pros of angel investing. What about some of the cons? What are some of the things that may make it a little bit make you a little bit apprehensive or scary to get involved? Well, unlike borrowing money to grow your business, usually you don't reimburse an angel investor. There typically is the trade-off, right? That angel investor now owns a portion of your company, which means that they may want some involvement in that company. And it may mean that you're giving up as John mentioned earlier, a controlling portion of your company. They may only want 5, 10, 15%, but they may want 50, 60, 70%. As we think of Shark Tank, there has been plenty of examples on Shark Tank of where the sharks actually wanted a controlling portion in the company. The other thing is you may find that angel investors put pressure on you to run your company a certain way or to return a certain amount of revenue back to them because of their investment. So you may find that you're under some pressure, and depending on how much ownership they have, they actually may end up taking your control of your company away from you. Think of WeWork and Adam Neumann.
So thinking about WeWork and Adam Neumann and that kind of venture capitalism, you might be wondering, well, what's the difference between angel investing and venture capitalists? Well, angel investors are usually affluent people or a group of affluent people. VCs who invest in your business, VCs or venture capitalists are companies with employees that run funds that invest other people's money in startups in exchange for a high ROI that they then pass back to the shareholders of that fund. So one is a little bit more personable, the other is more business.
Right. So there are some challenges with angel investors and venture capitalists when you're a startup. One of the things that's really kind of probably most in our face as minorities or individuals from communities that don't typically have small businesses or aren't big in the startup space is that there's a reason. There's an obscene amount of money. Over 90% of the money that venture capitalists give out actually ends up going to businesses run by straight white men.
And angel investors.
And that's one of the things that Arlan is going to share with us is that this is one of the big challenges that you face. But sometimes you'll face some other challenges that come from the comments that are made, right?
Yeah, if you don't typically fall into the traditional model of a startup business, right? Someone who's more likely to get that kind of funding from an angel investor or startup, you can or a venture capitalist, you can hear some pretty quirky things that you might not otherwise hear. So I'm in the middle of reading Believe It by Jamie Kern Lima. And if you don't know who Jamie Kern Lima is, she started It Cosmetics years ago, sold it for years, like 8 to 10 years on QVC, grew her brand, and then one day eventually got her business to a point where L'Oreal offered her $1.2 billion to buy her company, which is a huge and amazing success story, especially considering her background, where she pretty much came from nothing. Well, when she was starting her business and trying to get venture capitalists to fund her business, she received all sorts of no's. Sometimes not just a professional no, thank you, we're not interested at this time. She shares a story of how one time a venture capitalist told her that no one was going to buy beauty products from a person who looks like her. And she asked him what he meant by that. And she said, well, you're a little overweight. No one's going to buy beauty products from someone who's overweight like you. Well, she didn't care. She continued to promote and grow her brand, eventually was able to sell her company for $1.2 billion. So we know who turned out right in that situation.
And although it may seem scary, that you may end up either losing some control or a large control of your business, or some of the profit that you have to share with others. All of those kind of can be scary things, right? When you have your own business, the reality is that there's actually big gains that can come from having capital come into your company, helping it grow in ways that you may not be able to grow it all on your own. So let's talk to Arlan about why she's doing this and helping other small businesses, especially minority-owned small businesses, get started in this space of getting money from angel investors.